Hello, and welcome to the first session in our new webinar series here at Mike Albert Fleet Solutions. My name is Laura Manhart. I'm a marketing manager here at Mike Albert, and today I'm joined by two of our resident fleet experts who are going to talk us through what we're currently seeing in the automotive supply chain from a fleet perspective and how to manage any challenges or concerns related to that through 2023. So please let me introduce you to Jason Kraus, our Director of Vehicle Acquisition and Lease Structure, and Matthew Gast, our Director of Remarketing and Vehicle Valuation. Thank you both for joining us today and sharing your expertise and your experience. Before we get started, I just want to share a quick note for those watching via Vimeo or LinkedIn Live. You can use the interactive chat feature to submit any questions or comments, and we will do our best to answer those at the end of this session. If you are watching this as a recording, please visit mikealbert.com to chat, call, or email us, and we are more than happy to answer your questions or concerns at any time. As a reminder for current clients, you can always reach out to your client partnership manager, and they are happy to help you. So with that, we'll go ahead and get started. Jason and Matthew, can you share some insights into the current state of the automotive supply chain, specifically from a fleet perspective? Tell us a little bit more about the trends that we're seeing.
Absolutely. I'll start off, if you don't mind, Matthew. I think first and foremost, you just have to understand where we are for economic indicators and things of that nature. So clearly, depending on who you talk to, everyone agrees on one thing. We got headwinds, right? We don't have tailwinds. Things are a challenge. Depending on who you talk to, there are different levels of how strong those headwinds are and those challenges might be. But you look at the U.S. Gross domestic product, or GDP. The initial forecast, if we were 6 months ago, we're talking about north of 2%. Now we're talking about a fraction of a percent for the balance of the year. So that's not going to make things easier. The federal funds rate has gone from being microscopic at less than a tenth of a point to now being north of 4%. The Federal Reserve came back yesterday with a little bit of good news and said, well, instead of continuing to do the 75-point increases, we're only going to do a 25-point increase. So that tells us that things are a little better, or a little bit more under control, but it's still with its challenges. But though there are a few glimmers out there, right? Inflation, if the Fed is able to only increase by 25 points, that says that there's a belief that structurally things are more under control than less under control. Also true that if you look at different consumer sentiment reports, Cox Automotive publishes one as an example. And if you look at where things are now versus in October of 2022, that has increased or grown more positive by 7%. So I can't say we're done with all the challenges, but there are little glimmers I see that are positive in nature. What do you think?
Yeah, no. On the automotive side, we've seen seasonally adjusted annual rates of north of 17 million. We're seeing that, depending upon who you ask these days, that's between 14 and 15 million. Obviously supply chain constraints and things like that have taken a big toll. Fleet is just a portion of those numbers, around 1.8 million vehicles of the total. We've seen retail inventories continue to improve as manufacturers are getting vehicles to the dealership lots, and that's helping us out as well. So
we're seeing some positive trends on the whole, slowly moving the needle. How do we expect that to change throughout the coming year?
You want to start this one off?
Go for it.
Okay. So as Matthew mentioned, where we ended up last year, 2022 was around 13.7 million vehicles from a SAR perspective. As we look at different forecasts, depending on who you're talking to for 2023, again, 14 to 15 million units, somewhere in that ballpark, depending on how certain variables end up performing. Our supply chain dynamics, okay, what's up with transportation of vehicles, things of that nature. But again, whether you take one person's forecast or another, they're all saying that you're going to see growth. You mentioned fleet, right? That it's a portion. It was 1.8 million of the 13.7 million units in 2022. Well, fleet's expected to grow by 30%, by 400,000 units. So that, to me, indicates that dealer inventories, which I think is kind of a leading indicator for how much fleet is going to get or not get, that would tell me that dealer inventories are getting to about where they want them to be, different than where they have been historically,
For sure.
but they're certainly in a much better place. And with interest rates being where they are because of inflation and the Fed funds rate we just mentioned, I think it's likely that the retail demand is going to continue to fall off a little bit, which frees things up from a fleet perspective in the future. So I think when I look at 2023 and I think about what is likely to happen, I think fleet incentives. I think fleet incentives in some way, shape, or form could come back. I'm not saying the 2019 levels, right? We're not going to have a publisher's clearinghouse check show up at the door, but I do think that there is some money that will come based on those interests being high, trying to combat inflation. I think that dealer inventory levels along those lines are also going to continue to be where they need to be. And so that means that if you are doing a dealer locate, we're not looking at MSRP plus as we've toiled through in much of 22. But I think you're looking at MSRP. It may be different, right? Vans or pickups are a little bit more of a challenge. That might still be a little higher than a sedan or an SUV. But I think what's also true is you could perceivably, on an OEM by OEM basis, you could see more factory order allocation for fleet than what we would know about at this point in time. So I think your incentives, I think your dealer inventory is getting better. And then last but not least, I do think a lot of our existing clients utilize smaller vans, and that segment's going away. And probably just a good reminder to everybody to start planning accordingly. After model year 23, you can't get a Transit Connect or a Metris or a ProMaster City or an NV200. All those will have gone away from production. So you have to be looking and evaluating different options, and that might be looking to upgrade to a full-size van. That might be looking at going to maybe an SUV with upfit, a minivan, and there are some other options from a battery electric perspective that will be coming out in the market in model year 24, model year 25. That might be an option depending on range and other dynamics. So I think, to me, those are the things that I'm seeing as we look forward and throughout 2023.
Based on what I'm hearing, everything that you shared, we are expecting some positive trends. We are trending forward from 2022 and these difficulties that we've had the past few years since the COVID pandemic started. But not quite seeing the jumps we're really looking for. That is definitely a source of worry for some clients. We don't want to be worried. We want to make sure that everybody is prepared. So what are your best recommendations for organizations who are seeking to acquire vehicles through 2023?
I mean, I don't know, Matthew. My take, you got to recognize what the market conditions are, right? Today is not the time that you do all the plays that you had historically, where you did an all-in leverage strategy trying to maximize your what your incentive was going to be. Instead, you've got to look at flexibility to achieve, honestly, availability. And I think of it in terms of a time and terms situation. If what you need is a vehicle today, well, we can do that. That's going to be a deal locate, and that's going to be at a premium price. That's somebody else's terms to achieve your time. If what you need is a specific price, those are your terms. You can get it, but you're going to need to look at a factory order or maybe a bailment order based on upfit scenarios. I think that honestly, in some instances, you might not be able to get what you want. You can't get what you need. You may not get what you want, and your best option might be holding on to the existing asset you have. And so, I mean, looking at better fuel, or not better fuel economy, but better oil change and preventive maintenance and things of that nature. Maybe not at 7,500 miles, and maybe up it to every 5,000 miles, because you want to baby that vehicle until you know you got a sure thing coming in versus the what might be. What do you think?
Yeah, no, I'd say definitely, plan ahead, be prepared. Need to identify and understand what your needs are for, the immediate future and for the upcoming 12 to 18 months. Allowing us to consult with you to figure out what exactly we can do to help you maximize your opportunities to get what you need and fulfill it. And then flexibility, got to be flexible. You may not be able to obtain everything you want or need, So, explore alternatives, allow us to help you explore alternatives and figure out what else could potentially be available to fulfill this need.
It's probably also important just for everybody that's watching this today and in the future, keep in mind, like if you've got your trusted partner, and Mike Albert, if your client partnership manager comes to you and says, "Hey, the order banks are going to close," that's not a sales pitch, right? They're not trying to close a deal. They're trying to be honest and say, if we don't have this order by this date, then have you thought about the next model year? And that's ultimately they're trying to help you to achieve your plan. We get that feedback from time to time, and our approach is one of honesty. Here's when the order bank's open. Here's when it closes. Here are things that you can do specific to the manufacturer that improve your likelihood of not just an order being accepted, but perhaps being scheduled and ultimately produced and delivered. So I think that's also important to keep in mind, for sure.
Talking about industry-wide shortages in particular, you mentioned a little bit some small van alternatives might be needed. Are there any other vehicles in particular that you're seeing shortages?
Tough vehicle segments. Well, I mean, I mentioned it earlier. Vans is probably the toughest segment to get. Pickups is probably number two, and then it's one not that every client gets involved with, but heavy duty trucks, class 6, 7, and 8. A lot of folks will complain about what the on time delivery looks like for an SUV, a pickup, or a van. You're at a year plus for class 6, 7, or 8. So those are absolutely the toughest. That's not gonna resolve itself in a couple of years. It's gonna take a couple of years longer probably to fully get on the other side of it. And I would admit, right, if you were talking to somebody 2 years ago, they probably told you 2 years. So there's probably a snicker going on the home front hearing those words. But based on what the OEMs are indicating to us in daily and weekly conversations, it seems like it's there right now. But it's still specific to those segments. Even more important, why preventive maintenance cycles and enhancing those is a really big deal.
And like you said earlier, I mean, being flexible, seeking alternatives and being open to alternatives that can possibly fulfill your needs is crucial.
Flexibility may be the word of the year.
Right? And planning.
Well, let's take this to the opposite end of the spectrum then. We're also seeing organizations that are looking to sell off their vehicles in what continues to be a changing used truck market. What's the recommended path forward for those organizations? And in particular, how might they prioritize selling off their vehicles?
The recommendations would likely vary based on the client and their fleet situation. Selling the oldest vehicles in their fleet may or may not make the most sense for those vehicles, depending upon their utilization, depending upon, kind of their maintenance needs and things like that. On the other hand, some older vehicles that may be experiencing, significant maintenance issues and or issues which may lead to catastrophic issues, could be the ones that you do want to cycle. Another consideration would be replacement. If you are going to be cycling a vehicle, can you get a replacement? Have you been able to plan ahead of time and have a vehicle on order for that? Again, back to the planning and overall flexibility for replacement. Overall, though, we're seeing the market is softening quite a bit. Cox reported recently that the December 22 wholesale prices are down about 15% as compared to a year ago. And we're expecting that to continue for certainly this quarter and probably the next as the pattern continues over the next decade.
One other aspect I think that's important for our clients, a lot of them utilize upfit on their vehicles, right? So I get my vehicle, can I get my upfit? Can I get my upfit and my vehicle? Maybe you get one, not the other. So you just want to be mindful. Again, vans, pickups, toughest segments to get your hands on. Well, you want to make sure that whomever is doing the upfit work, they know how to go about getting the upfit, not only the vehicle, but the upfit and seeing it the whole way through. It's amazing what supply chain challenges, and they change day to day, week to week, but there's a reason why we're there to support our clients with honesty and transparency and just sharing as much information as we have at that moment and what we anticipate in the future. Upfit would probably be another factor in my mind. So
For sure.
Certainly. So we've covered what to do if you need to acquire vehicles, what to do if you're selling off vehicles, how to best manage that through upfit and that supply chain that we have. What do organizations who are just seeking to maintain their fleet to throughout this year? What do they need to prioritize in order to make sure that they get to the other side with their fleet fully intact and protect their total cost of ownership?
I think maintaining the fleet maintenance is important. It's crucial as the vehicles continue to age, and making sure that the preventive maintenance and things like that are being handled is crucial.
I think part of that, you start just getting into telematics and are you looking at total cost of ownership? Are you factoring in routes? Are you looking at idling being exceptionally challenging on the engine for that vehicle? If the engine's not working, how good is the rest of the vehicle for you? So I think those things, telematics absolutely matters as part of that. It's not where you're at on the map anymore, right? It's all this other data. Sometimes it can feel overwhelming. It's why you want to make sure that you've got something that leads you to managing by exception, not seeing all the masses of information on every single vehicle every moment of the day.
Yeah, the days of "dude, where's my car?" I mean, that's you can see that everywhere now. But the telematics, the data that the vehicles are able to provide with the vehicle health, the driver behavior, understanding all of that, and really getting ahead of some of the potentially catastrophic events is really important these days. And we have solutions to help with that.
And there are a number of different telematics providers that are out there, including but not limited to the OEMs themselves. Would love to talk to you about that. And all those things work very well. They're different one way or the other. But something that we can offer would be having everything encompassed within Overdrive using our Albert IQ platform. So you just go one place for all your vehicle information, including but not limited to those exceptions based on telematics and your maintenance and your everything else. It streamlines and simplifies your life if you're the fleet administrator.
It's amazing the amount of real-time data you can get relative to vehicle health, relative to driver behavior, and make decisions on the fly in the moment.
We had a client that flipped the switch on a number of vehicles, and they had 4 right away that popped up for Albert IQ repair orders and said, "We're seeing the data and we've got problems." And we didn't have that visibility before. The client didn't realize that the drivers were driving around with engine lights on, but we're able to immediately take care of it because they had that visibility with an Overdrive. So I think those are some of the different things to keep in mind.
Thank you both. If there's nothing else you wanted to add to those questions, I do have a few submitted questions I wanted to run through with you guys.
I don't have anything further to add.
No.
Thanks.
Okay, so I have someone who messaged into us asking about the near future state and indications of recovery. They note that we've seen these incremental slow changes. Last year's growth definitely did not measure up to, I think, what we were all hoping for. Do we see us getting to that return to pre-2020 status anytime soon? Do we see us recovering? Tell us a little bit more about that.
Yeah, I'll take that one on. I liken it to we're in a very, very, very long tunnel, right? We see lights on the other side. At different moments, you look to the person next to you and say, is it the other side or is it the train? But I think at this point, it's the other side. It's taken us longer than certainly any of us would want it to, and probably longer than we want to admit to. I mentioned earlier, you're probably 2 years away from full recovery, and certain segments may take longer than that. Vans, pickup trucks might happen around 2 years. Some other vehicles maybe happen sooner than that. Vans might take longer than 2 years. Heavy duty may take 3 years or longer as that sorts itself through, because you've got so much demand that far exceeds whatever the supply dynamics are, the production dynamics. Dealer inventory levels are up 67% from where they were a year ago. So that's really good. It's really scary when you understand that some of the OEMs are managing and measuring their dealer inventories in hours versus days. Thankfully, we're not just back to days, we're back to weeks, but it's not going to go back to where it was in 2019. You're probably looking at and each of the OEMs will put out statements, but 60 to 70% is the number I tend to hear of where they were before. It could be a little bit more at times, certain models, but it's not going to be, filled to the gills in terms of inventory on the dealer lots. I also think that, another one of those positive signs we've heard from different OEMs that have done allocation programs for inventory, where you can't just openly order anything and everything. They have to say, we got you on the list and you're allowed in the club and place the orders. We've had several manufacturers with allocation programs, and they've come back to us and said, hey, we're willing on this model and this model to allocate this much more to an existing client, or we're able to open it up to people that maybe we haven't talked to before. So I think all those are positive signs. Is that you can order whatever you want, whenever you want. No, this is not an Uber Eats program. This is not a soda machine. But I think that we're getting better. And I also think if you think of supply chain dynamics, that's also changed. Depending on who you talk to, there might have been 50, 60, 80 different issues commodity wise at one given moment. Now it's usually one or two, depending on the model or the manufacturer they're chasing down for that week or that month. I did cry out bingo recently. Tires I'd heard, microchips everybody's heard, seat foam, headliners. Headliners was a new one I had not heard before. So if that's any indication of, there is a lot of variability, and that has to do with manufacturing things, that has to do with labor, raw goods, as well as transportation. And one of the manufacturers just put out a blurb on a press release that said they bought 400 tractor trailers so that they could go and haul vehicles from the plants and the ramps out for delivery purposes. So I think that tells me, well, production's okay. Now we got to get the delivery mechanism up and running. Well, okay, that this is a path to go ahead and resolving that. So I think things are getting better. It's just going to take a while.
Yeah, I think being prepared, understanding what your needs are, whether we can fulfill 100% of those, or whether again flexibility and being able to be able to pivot and use multiple sources for fulfilling those needs. It's all important.
But on the flexibility pieces, again, if you're going to go look at dealer locates, you may be paying less than MSRP plus, but depending on what you're looking for, that SUV is probably not going to be a base model fleet friendly one, right? It's going to be a higher trim. So it's not to say that doing that again, the time and terms mentioned I had earlier, you're going to be paying a premium for that. And the premium may be because everybody gets a sunroof, and you didn't necessarily want to spec that for everybody that's a driver of yours.
Yep, you'll move away from fleet standardization.
Yes.
Thank you for your answer. You guys okay if I move on to the next question?
Yes, please.
Perfect. So this person says that they are unable to work with the current high vehicle prices, but they do need vehicles. Is it recommended that they just try to manage and maintain their fleet till we get to a better position? Do they try to downsize and keep their fleet running with fewer newer vehicles? Or really just they're trying to figure out what the ideal strategy is for getting through the remainder of this shortage with high costs?
I don't know that there's a one size fits all approach or an answer for every single situation. I mean, I think it varies, and really need to look at the specific situations, analyze the fleet, and develop a recommendation. Overall, the with the higher prices, if that's something that they can't, that isn't sustainable today, maintaining before downsizing is probably the right recommendation in that situation. But I think it varies based on utilization and really the needs.
And I think all of that points towards, you want to not go with your gut. You want to go with numbers and data, and having the right partner to help consult in figuring out what are the right things to do. What today, what tomorrow, what 6 months or a year from now, and we can certainly help with that.
And with all the data that's out there and available today, I mean, it's almost predictability is becoming a lot more important and a lot more prominent in a lot of the analyses we're doing.
That's a great point.
The next question I have for you is really just, what about EVs? What about hybrids? Where do those stand right now? Are those a good idea to start investing in? How do I approach that?
I think this is a topic of conversation virtually every client meeting we have. What's your take?
I mean, EVs are definitely, they're here to stay. It's pretty obvious they're not going anywhere. I mean, they're becoming a lot more mainstream, a lot more available. But I think hybrids are still, very, dominant, and I think will continue to have a place in our fleets and with our clients. So again, I think depending upon the utilization and depending upon the use cases that a client has, EVs can absolutely be the right thing for some use cases, hybrids for others, and maybe there are some that frankly it doesn't make sense based on the utilization to move into the EV or hybrid space.
Yeah, I like to think of it as not just everyone wants to talk to you about an EV. Not everybody's ready to go there yet, but they're curious, and I think electrification is the broader term to use. And hybrids, a lot of people are going to make a stop at Hybridville before they get to EV Town. Think of it in that context. The telematics data, we've mentioned that once or twice, but I think it has a play of pertinence here as well. That if you have that information, you know for a fact what daily ranges are for different drivers versus you perceive, well, Sue and John, Joe, and whoever, well, they drive about this much. You look at the data, we find time after time where they drive a whole lot more or a whole lot faster or idle longer and all these different factors on why an EV may or may not be their best option. So the analysis, the flexibility, the understanding and awareness. Also, if you're talking about electric vehicles, you should really be talking about charging and what is your charging strategy to get keys to an electric vehicle and then turn it into a brick because you didn't know how to charge it is not a fun day. We've all had those different calls before. We've helped people out, but you really want to make sure that if you're placing that order for that electric vehicle, by that point, you either have your charging present or you're pulling the trigger at this exact same moment. And you do not want to rely solely or wholeheartedly. You don't even want the majority of the time to be using public charging because it's expensive. And you really want to be utilizing that vehicle as much as possible instead of having your drivers parked, not doing the job because they got to charge up during the middle of the day. If you depot charge or you home charge and can do it overnight when the vehicle's not being used, it's probably the least expense version a number of different ways. So charging and EVs, don't just think of the shiny vehicle, the torque, and the everything else that you read about in the papers. The charging piece is a really big deal.
Well, thank you both. Those are all the questions that I had already submitted. I'm going to go ahead and give everybody just a few more seconds to submit it as they would like to, but also send a reminder for any current clients who have questions. They are more than welcome to reach out to their client partnership manager. That's why we're here. We're happy to assist you with any questions or concerns, especially as we prepare for a continual rocky way through this industry right now. And then for any prospective clients, please visit mikealbert.com where there are call options, chat options, or email options to be able to get in touch with one of our team members and get started on putting together a fleet plan for you. And I don't see any more questions submitted, so we'll go ahead and cut it off right here. Thank you, Jason and Matthew, for your expertise, for your time, your knowledge, your thoughts. We really appreciate that. And we'll see you all at our next webinar session. Thank you so much. Bye.
Thank you.